What's good, people, traders, and dedicated gold chasers? Welcome back to the modern day trader. Today we're talking about those frustrating times in the Forex market where everything is just not moving in your direction. Every trader faces it. So instead of sitting around watching your account dip and take a dive, let's take a moment to go through what you can do to make the best of those moments. Let's dive into it. So the first thing to do is review your trading journal. First up, just grab your trading journal, review those wins and losses. This is one of the most powerful tools that you have when the markets are not moving in your direction. Review the wins and losses, especially when the markets are quiet or not moving in your favor. Look back at the trade. So as you guys can see, this is my last 5 or 6 trades that I've taken. Take a look back at your journal. This is the reason why you need a journal tool to journal every single trade that you've taken, so that you can take a look back at the trades you've taken under similar conditions, and then you can start asking yourself, did you jump in too soon? Did your entry rules slip a bit? And these insights are valuable for refining your trading strategy, and you'll often find patterns that might help you avoid similar setups in the future. So when you're looking at your past 5, 6 trades, and you can see with me particularly, the reason why I'm making this video is because I am sitting in frustrating times in the market. Price action and just in general, pound yen has not been moving too much. So that's why you can see that over the past 5 or 6 trades, I went through a losing streak of 4 trades, and then I got a break even in this past week. You can see the results are clearly reflective of market conditions that are quite frustrating. So you need to start asking yourself after doing this, is it yourself or is it market conditions? Did you jump in too soon? What, did you not follow every single entry rule? Did you not follow every single bias rule? Do you have the proper confirmation and evidence that price action is actually moving in your direction? And these are the things that you need to ask yourself when you're looking at your journal. And this is the very first step that you need to do when you are sitting in a frustrating rock and hard place in the markets, especially when price action is not moving in your direction. The second thing you want to do is you want to assess the market structure. So what you want to do is you want to step back and assess the market structure. We all know that the market moves in phases of consolidations, expansions, retracements, corrections, pullbacks, impulses, whatever you want to call it, but the market moves in phases. And more likely than not, when you are facing this frustrating time, you will more likely than not see that when you take a step back and you take a wider look at higher time frames, maybe the 4H, maybe the daily, maybe the weekly, you will more likely than not see that price action is in a range. So what you can see is that price action on the 4H was actually in a range for quite some time, from the 27th of September all the way through to the 22nd, and now we're just about breaking out, and we could potentially see that pound yen start moving forward and moving to the upside. But what I essentially needed to do was I needed to step away from the market and take a step back and maybe just take a wider look at the higher time frames, such as the 4H, as you guys can see, potentially even the daily. And what you can see is that you have multiple small daily candles that were failing to either break above these areas of 195, 19600, and then failing to break below 189. So quite clearly, we were stuck in a range in the markets. And if I took that step back, I could have understood and been able to see what exactly is happening. just because sometimes a simple shift in perspective can reveal a bigger pattern you might have missed when you're on the lower time frame from day to day. And those are simple steps that you can put in place. Number one being just to check your journal, see if you have followed your plan accordingly 100% of the time. Number two is to assess higher time frame market structure, and then to see what exactly is happening on the higher time frame that is actually making you lose upon entry of hate, right? Number three is quite important, and I don't think a lot of people actually do this. Number three is check your correlation, right? Check currency correlation. Let's say, for instance, in my case, if I'm trading GBP JPY, have a look at other related pairs such as GBP USD and USD JPY to see like how well they're performing. It can be very helpful to see how these other pairs are moving. Sometimes just analyzing any other pairs with correlation can show you exactly what is actually happening from a fundamental perspective. There could be fundamental reasons affecting one particular currency pair, and it can provide clues on when you can see potential momentum returning back into the market. So with that being said, let's just take a look at, for instance, pound USD. Now what you can see from a higher time frame perspective, pound USD was actually making higher highs, higher lows, and then you can see from about the 27th of September, you can see great weakness in the market. Now this could signal US dollar strength, or it could signal pound weakness. Now what we can see from pound JPY is that we were actually slowly creeping to the upside. So that clearly doesn't show clear pound weakness. So we have a sentiment like a battling sentiment where you're stuck between a rock and a hard place in a way, right? So what you can do in this instance is essentially check another pair such as USD JPY or any other of the pairs that is correlated to pound yen. So in this case, when we're taking a look at USD JPY, now you can see that we actually have a weak yen. And the reason why I'm saying this is that you can clearly see that we are moving to the upside. Now, as I mentioned, this could be indicative of a strong dollar, right? But what we can see is that this could potentially be a weak yen, right? So you just take a look at one other pair just to give you confidence, whether it be EJ, CJ, AJ, doesn't really matter. But what you can see is that overall, it seems like we have been pushing to the upside and then we went into a range. When you can see, when you're looking at CAD, pushing to the upside, lower range, and finally a breakout. When you take a look at EJ, pushing to the upside, lower range, and finally a breakout. So these are the types of things that when you are stuck in market conditions and you're taking a step back and you also comparing currency correlation to actually find out what exactly is happening, you can now understand what other pairs are doing to then see where your breakout areas are or where your liquid areas are in the market where you could collect liquidity to then potentially push in the direction that you need to push into. You can use these tools to establish where the market will go to on your particular pair. So now we've established that we have a weak yen, but we've also established that we don't necessarily have the strongest of pound pairs. So what does that mean? That means that pound yen will go into a range or will stay into a range until further notice. And that's what you could see happen here. So step number 3 is really important, just in understanding the greater scheme of things and understanding what fundamentals could do to your particular pair. And those are 2 or 3 really important steps. So step number 1 is to review your journal, understanding what exactly is happening. Have you followed your plan? Have you made possible mistakes and errors, human errors in following your plan, so that you can establish what you can get better in your next set of 20. Number 2 is essentially taking a look at and assessing market structure on your particular pair from a higher time frame perspective to give you a different view on what is happening at the current moment. And then number 3 is check your currency correlation to understand what could be affecting your pairs from a fundamental perspective. So we're back to my beautiful face traders, and step number 4 is to optimize your trading rules in the time when the markets are not moving correctly or in your favor. When the market's moving slow, it's pretty simple. This is a great time to take just to define your strategy and simply just make your strategy leaner, stronger, and better than what it was before. As I mentioned, you have your journal. You have every single thing and every single trade that you've taken up to this point. Now you're sitting in market conditions that's frustrating, slow. You've taken 3, 4, 5 losses, and now you're stepping back from the market. You've assessed the market already. You understand currency correlation. You understand what your market structure is, and you have reviewed your journal. The next step is just to optimize your trading strategy. Pull up that trading plan and take a look at your trading plan and compare to the trades that you have taken. Once you've established that you followed your plan 80% of the time, you can clearly see that the markets are moving slightly a bit different. This might mean that you might have to adjust for these differences and variances in the market. However, if it's not that, and it's the fact that there is human error, there is potentially things that you are doing to self-sabotage yourself in the markets, then this is a great time to start working on those qualities that is going to make you a better trader, such as self-control, discipline, and a big thing is patience, guys. So take the time out in this time where the markets are frustrating and slow. It's not a time to, as I mentioned, let your account take a dip or a dive. It's a time where you can now step back out of the markets. You know where you anticipate momentum to step in. And until momentum steps in, you are busy redesign, redesign, and remake those rules to then be better, stronger, leaner, and just have more muscle mass to follow the next push and the next momentum impulse in the market. That's step number 4. Let's move on to step number 5. Step number 5, be patient, wait, and sit on your hands until the right setup appears. Often traders don't realize that patience pays. It's better to sit on your hands and wait until the right setup appears than to take a trade and lose and have your account set back by a percentage or 2. Forex is really all about timing, guys. It's really all about timing. As sticking to your plan means that the right setup will come at the right time. And when this does happen, you will be able to take advantage of it. Sometimes the best trade is no trade at all. So there you have it, guys. 5 things to do when the market isn't moving in your direction and it is a bit frustrating. Bear in mind that trading is a journey, and every setback is an opportunity to learn from your results and to become a better trader. So with that being said, guys, from your boy Marcy at the Modern Day Trader, please don't forget that your unmatched perspicacity coupled with your sheer indefatigability makes you a feared opponent in any realm of human endeavor. Peace out, man.